Do you have too much money in your small business corporation? What kind of question is that? Well, it can be a legit concern for many small business owners. Okay, what am I really getting at? Well, it's this. Is your small business corporation pure? Okay, John, you're 0 for 2 right now. What the hell do I mean here and why should I care? Believe me, you should care. Watching this video could save you hundreds of thousands, if not millions of dollars, which isn't bad for 5 minutes of your time. But before I get into it, if you find this video helpful, a like and a comment will go a very long way to paying it forward. And by comment, I just mean, what was this helpful? And what else would you like to know? And of course, subscribe and hit that notification bell. So, you've been chugging along for a few years now and your incorporated small business is starting to make money. Crazy, eh? All that work is paying off. And the bank account is starting to get bigger. And while that's a totally awesome feeling, it also creates other problems. Getting wealthy doesn't end problems, it just creates new ones. Now, if this isn't you, despite several years of operating, I think you really need to have a chat with me about our inspiration program. And here's a link up here to what that's all about. The fact is, you should be making money by now, and if you're not, I can help. Okay, back to that awful problem with too much money in your company. Can you spot the sarcasm? Why is that a problem? Well, too much money isn't the problem, but where we keep our money and what we do with it, now that's the problem. The good news is that after this video, you will know exactly what to do. But first, why is too much money sitting in our bank account a problem? Here's 4 reasons I can come up with off the top of my head. Number 1, well, the opportunity cost of the money just sitting there. Like, could we be putting that money to work in our business to help grow it? Is there a piece of machinery we could buy that would make us more efficient? Is there a new human resource we could get in to increase our capacity? Is there some higher interest debt we could pay off? Or getting that money invested in a portfolio or investment product that could yield us a decent return? Number 2, think about what inflation is doing to the value of that money that's just sitting there. It's like leaving a bag of bread open, like I tell my kids. When you leave a bag of bread open, the top half gets hard and crusty, and the bottom kind of gets, well, not as fresh. And if it's left out on the counter too long, it's really not any good anymore, unless you like taking the long road to untoasted toast. Money not invested is like that. It's worth less purchasing power every day. Number 3, think about protecting your hard-earned money. Let's say someone takes out a civil suit against you or your company for whatever reason. Wouldn't it be nice if your money were protected in a nice legal way so that no one could get to that money and essentially destroy your dreams of an early retirement? Number 4, now this one's a biggie. Having too much money or passive assets in your operating company can jeopardize your access to the capital gains exemption available, which is a very cool tax shelter available to small business owners whose businesses are incorporated. Just see the video I did previously on this, but here's a quick and dirty on this. Eventually, you may want to sell your business someday. Well, if your business is incorporated and a buyer is willing to purchase your shares, you may, if you've been a good little small business owner and listen to your CPA, sell your shares in that company for like in the range of millions of dollars or even several millions of dollars. With good planning, you pay no tax, virtually. There's a little silly refundable thing the feds do, but I'm not going to get into that here. Let's just chat if you're close to selling. Now, if you have a crap load of cash or passive assets like a portfolio of investments or vacant land or rental properties, etc., in your operating company, you may not get to use the shelter if you haven't done good structural changes to your company organization. I know this sounds all fancy and stuff. It's really not. We just like to sound all smart. But the capital gains shelter with good planning can be worth several hundreds of thousands of dollars in your pocket. Losing that benefit would be a real bummer, eh? So totally avoidable with good purification planning. Now, how can we get that excess money and assets that we don't need to operate our company effectively out of that company without creating a big personal tax bill? Awesome question. There are several ways, and here's just a few. You can pay off suppliers quicker. That's an easy one. You can pay down loans within the company. Make sure you run this by your accountant though. Tax-deductible debt, especially low-interest debt, isn't the worst thing to have in your company, providing it's not jamming up any financing conditions. This is called a leverage strategy, and it's a good way to get more capital working for you, which sort of magnifies profitability. Now, we're probably at the beginning of trending towards higher interest rates. So again, just keep your accountant closer than your best friend. You can also pay down any monies your company might owe you. This is an awesome tax-free way to get money out to yourself and reduce that pesky asset problem you have. You can bonus out the excess money, like take out a lump sum payment as a paycheck and immediately deposit into any available room you have in your RSP. This essentially is virtually a tax-free way, or rather a tax-deferred way, to get the money out of the company. However, there will be federal taxes withheld and CPP expense and yada yada. Now, again, depending on your accountant, there may be different schools of thought on this strategy, but it is an option. I'm not a huge fan of it because in my mind, once money goes into an RRSP, I really hate anyone taking that money out until they're ready for retirement, which kind of takes that money out of circulation in your world, which you may need from time to time, depending on the circumstances your company might be going through. Also, as you likely know, there are limits to the amount of RRSP we can contribute every year. So this leads me to my favorite long-term solution for corporate small business owners that will continue to face this wonderful problem of making more money than a shareholder needs to live, and that is this: creating a purification structure. Now, basically, this exercise involves creating a family trust, also known as a business trust, and incorporating another company, which today we'll nickname holding company. Imagine your operating company is a pail, and the water that you carry around in that pail is cash. Now, for the reasons I've mentioned previously, we don't want the pail to overflow with too much water. So to keep our water at a maximum level, we drill a hole into our pail. And we get another pail, which we place downhill, so gravity works, from the operating pail, and we connect a garden hose to the hole we just drilled, and we place it in the second pail, or the holding company pail. Now, some reasons that are just too complex to get into here, I want you to also imagine that because the water from the operating pail flows into the holding company pail, that it needs to be filtered. So we get a sieve or a strainer and we place that over the holding company pail before the water from the garden hose empties into it. The strainer in this case is the family trust or the business trust. They mean the same thing, by the way. The purpose of the strainer or the family trust is not to hold water or cash, but to just flow it through to keep the cash or the money pure. There's other reasons for the trust, but for the purpose of this video, I'm only speaking about the purification reason. So that's the structure, okay? Now that the money is in the holding company, what do we do with it? We get it invested in a good diversified portfolio or some rental properties or a permanent life insurance policy or a state bond. The point is, you get that money working for you. And if your operating company ever needs some money to get through some tough times, or maybe just to finance an expansion or some new machinery or equipment, your holding company can just lend it back, which now makes you the banker. You can even charge yourself interest. It's all yours. Now that's what I call off-the-grid financing. And there's just about nothing sexier. Just about. What else is cool about this? Well, remember when I talked about protecting yourself in the event of a civil suit in the operating company? That maybe the liability insurance policy doesn't cover entirely or at all? Well, those assets are really protected. And it's a legal subtlety, but in a nutshell, that family trust adds like a bulletproof vest level of protection that you don't entirely have with just an operating company alone. Okay, so what's the downside to a purification structure? There are mainly three. First of all, it costs money to set up. Between the lawyers and the accountants and the registry of joint stock fees, it could be up to 10 grand when all's said and done. So there is an element of scale of excess funds being generated before this structure will make sense. But a good, non-partial accountant like me will advise on when the time is right. Number two, it will increase your annual costs. You will now be required to submit tax returns for the newly settled trust and the holding company. It's not crazy, but it's enough for me to mention here. And finally, it does add complexity. Not that you need to worry about overly if you have a good CPA in your life, but there are a couple additional steps you'll need to be aware of when you want to pay yourself a dividend or if you want to move money from your operating company to your holding company. So this is a little background on purification structures, and I would encourage you to book a call or a meeting with me if you want to do a bit of a pulse check to see if you are ripe for purification. That's it. Stay pure, my friends.